Regulators have advanced a plan to ban derivative contracts based on political elections and athletic competitions. This is an effort to distinguish between gambling and the financial markets. More event contracts were listed for trading in 2021 than had been listed in the prior 15 years combined. Joining us is CFTC Chairman Rostin Behnam. Mr. Chairman, why the need to do this, essentially to say that the outcome of a political contest such as an election should not be listed for trading or accepted for clearing? Why is that the case?
David, thanks for having me. You said it right there. We've seen an exponential growth in the listing of these event contracts, and specifically ones around elections. The bottom line is, with election integrity on the line, with questions about election integrity and the way news travels these days, I don't think we have any room for error when it comes to listing election contracts on financial markets. We don't want to commoditize elections. This puts the CFTC in a very uncomfortable position of being an election cop, thing I've said many, many times for over many years at this point. I don't think that's what Congress intended, and we're just moving forward with a rule at this point that is pretty consistent with our position over the past decade, if not more, about how we view election event contracts, both gaming and, more importantly, not in the public interest.
Yeah. Now, if aren't there any number of gaming platforms that I can bet anything I want to, certainly on the outcome of an athletic event and or things that occur during it, not to mention even political events as well?
Well, I could use as an example what goes on over the UK. I mean, most of the election type of gambling is in fact sanctioned as gambling. It's not sanctioned as market regulation or sanctioned and regulated by a financial market regulator. So we have to distinguish those two things. And I think it's important, given the importance of elections from a states' rights perspective, if folks really want to see this move forward, the issue is going to have to be addressed at the state level. But from a federal perspective and from a financial regulatory perspective, we don't want to, again, commoditize elections, because it raises issues around the democratic process and election integrity and puts a market regulator in the position of being an election cop.
Why have these contracts proliferated so much over these last few years, given, again, the availability to gamble, so to speak, on other platforms for the same purpose?
David, it's a great question, and something I've been talking about over the past 3 or 4 years since becoming chair. It's technology disruption. It's consumer appetite and consumer preference shifting. We saw this obviously with GameStop, Reddit. We saw a lot of appetite increase in the futures market back 4 years ago in 2020. There's just an increase in the demand for exposure to financial products. And with the access basically becoming very easy with phones and technology disrupting traditional models of market participation, this is why I think we're seeing such a huge influx in growth. And, for better or for worse, we have to draw lines around where we want to see exposure and where investors should be able to get exposure into financial markets. But we also have to draw these lines, as I said, where there's going to be issues that potentially denigrate the democratic process and call into question our electoral process.